You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it is Tuesday. That means it's interview time here on the old Options Insider Radio Network, where we bring on guests from throughout the world of options and derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the optionsinsider.com, as well as, of course, on the aforementioned network. Pleased to see so many new listeners discovering our network every week these days in these troubled times. We're endeavoring to keep up with your demands for content out there. Pretty much something hitting you every day on the network, if not 2 shows a day out there. So we're keeping you informed, enlightened, maybe a little bit entertained over there in the world of all things derivatives. Make sure if you like what you hear, keep those reviews coming on your platform of choice so new people can continue to discover the network. It's more important than ever in these troubled times. And, of course, keep those questions coming. We do love to hear from you guys. And let's see who we're hearing from today. We have a newcomer joining us on our Options Insider Radio interview program. He is Peter Harrigan, the CEO and co-founder over there at Swan Digital. Peter, welcome to the Options Insider Radio program.
Well, thanks for having me. Appreciate it.
And Peter, as we are wont to do with all of our first-timers here on the network, why don't we go ahead and give our audience a little bit of an overview of your background in the financial space and how you found your way to starting Swan Digital.
Sure. Primarily came from the capital markets world, was a trader upstairs at Bank of America for a short period of time, and then I was a trader on the floor in Chicago, traded in the currency options at the CME, came out to California in 1999 and did equity options at the Pacific Exchange for a while, so very familiar with the derivatives field. Basically a floor trader for, I guess I was going to say, as long as being a floor trader was a good job. Actually, the reality is maybe a floor trader slightly longer than the period when floor trading was a good job. Stayed a little longer than I should have. Then about 2007, I did my first startup and got involved in a company out here in San Francisco that was involved in machine learning. Essentially, it was an evolutionary technology looking at developing or evolving short-term trading strategies. There was a company called Sentient Technology. I think I was the 4th most important out of 4 founders with that company. But I stayed with them for about 6 years, went from nothing to something, to being a bigger sized company at that point. But then left as the company was sort of making a turn into a different area. And then kind of got interested in the blockchain space in about 2014. I left well enough that I had the luxury of kind of figuring out what I wanted to try to do next, which was first for me. And so I decided I wanted to know more about Bitcoin and blockchain. Started going to Ethereum and blockchain meetups in Silicon Valley in about 2014. Where, among other things, I ran into my business partner, Steven, who's got an aerospace engineering background. We started talking about what you could do with these new technologies, and eventually we kind of came up with what we're working on now.
You're an old school Pecos guy then. I always used to was somewhat envious and also terrified of the Pecos lifestyle because I had a hard time making it to the floor of the SIBO for the opening bell and being ready to go on my A game to trade at 8 a.m., let alone 6 a.m. I don't know. How'd you guys do it, Peter? That would have killed me.
I don't know. I was young, had a couple of kids and a lot of expenses, and I just had to do it. I do remember getting in. I'd get in about 5, and I remember I was long gamma in a particular stock. I think it was Gilead Technologies, and the stock dropped massively. And I bought some like at 5 a.m. before the open because I'm long gamma. It's down $30. I'll buy it. And I'm talking to a guy in the pit at like when the market opened. I said, "Well, I paid $30 for this stock." He goes, "When did you buy it? Is it trading at 45? When did it trade 30?" I was like 5 a.m. and he just looked at me like 5 a.m. What are you talking about?
That was the benefit of getting going that early. You got all the good scoops on the long gamma.
I got the good scoops that the other people weren't worth. It is always a little difficult, right? Weighing all, because you only get the scoops every now and then, right? But you have to go in every single day.
Yeah, the Pecos guys used to always argue to me that, you could eat a burrito on the floor, which was awesome. We couldn't even bring a bottle of water to the floor of the SIBO without getting tackled by armed guards. And then also they were out and they were playing golf by 1 o'clock. And I would always say, well, okay, but you're in bed by 8 like a grandparent. So it's
yeah, absolutely. Yeah.
Crazy lifestyle. People who aren't traders don't really understand. You get into your office job early, you roll in maybe around 7 to get some stuff. You start working on your spreadsheets, but you get to have your coffee. You get to wake up and start your day. It's a slow, gradual process. Trading, that bell rings, you have to be on. You have to be ready to go. And I think 6 a.m. for most people, Peter, is probably before the line of demarcation where their brain is ready to handle that stuff.
Well, it's funny you mentioned that too, because I can remember a situation where I was like short gamma in Adobe, and the price was going down, and selling into it, and then it started rallying, and I'm like, oh my God, buying it back, and having all this stress and everything like that, and then looking up at the clock and it was 9 a.m. Right? I'm like, oh my God, I've got to get through 4 more hours a day with this, but yeah. It is an interesting lifestyle.
Yes, I've gotten us down the Pecos rabbit hole long enough. Let's move on to what you're working on, right? I could talk crazy early morning trading on the Pecos for hours here if it's not already obvious. But you're working on this new platform, Gray Swan Digital. Give us a little bit of a breakdown. What the heck? We know black swans. We've heard some white swans. What are gray swans, particularly in the digital space? What are you going after here, Peter?
Well, actually, it's interesting you bring up the black and the white swans, right? So this was actually Nassim Taleb's demarcation of swans, like a black swan, right? Completely unanticipatable event, something that you couldn't see coming. White swan is something fairly obvious. You know it's coming. A gray swan is something that you know it could happen. You absolutely know that it's a possibility, but you have absolutely no idea when it's going to happen, right? So you think about any kind of hedging that takes place. Most cases, people are hedging against events that they know are possibilities, but they can't anticipate when it'll happen. So we use that name, respectfully stealing it from him. But essentially, what we're doing is we're trying to change the derivative space in a lot like the way Apple changed computing, in that sense of creating derivatives that are more visual. We're actually looking at the curve of the payout that a person is looking at. That's the thing you go to first. And then it's also somewhat intuitive because you're manipulating that curve with kind of the drag and drop sort of technology that we're all used to now. It's safer because the risk is bounded, and it's very effective because you can come up with the kind of nonlinear payout curves that fit a lot of the risks that real companies have in the real world. So when you think about the way Apple made things very, very easy to use on the PC, I know it's kind of a dated reference at this point, but that's what we're trying to do. We're trying to make it extremely easy to use for people who don't know anything about options.
Not sure if you heard, Peter, but Apple, they're the bad guys now. All the Fortnite kids hate them.
Yeah, no, I know. I remember they used to be the good guys. I'm thinking a long time ago. Okay, so maybe we'll say we'll make it easy the way that Robinhood has made trading easier. So I was trying to have a reference that doesn't date me back to the late 80s or something like that.
Well, I know the kind of the foundation of this Gray Swan Digital is this price sharing platform. It's an interesting idea. It sounds kind of intriguing. Break it down for us. What do you mean by this price sharing platform and this price sharing economy you're hoping to build here?
Right. So price sharing is essentially just a term that we came up with essentially that's what a derivative is, right? With derivatives, you're sharing some of the impact of price without actually owning the underlying. And so the reason we use the term price sharing, though, is, again, by trying to make something so intuitive and simple that it's so easy for people to do. There are a lot of risks out there that people have, and they don't know how to hedge it, and they don't want to have to learn how to do it. In many cases, the instruments that are out there are not exactly right for the risk. And so essentially what we're trying to do is make something that's so intuitive. It's like a lot of the things in the sharing economy, right? Like, Lyft or Uber. These things are just very, very easy to do. And we're trying to get to that level of ease for the end user. The reason, again, we use a different term than just derivatives is, I guess the example we kind of come up with is you think of like water, right? It's H2O, whether it's liquid or if it's solid. But if it changes enough, right, you get it cold enough, it changes into what feels like a different substance, even though it's the same thing underneath. And so for us, this is essentially a derivatives platform, but we're trying to make it so different that it feels like it's a different thing.
I can certainly get behind not using the D word. There's a reason we don't call this a derivatives insider network. No one would listen to it, Peter, and it would terrify the ones who did. So I can certainly get behind that naming convention, sir.
Right. It definitely got a bad name for a while there.
But, you mentioned this price sharing economy. It's an interesting idea, and the goal is to try to get the benefits of the D word, derivatives, out to people who you term are unserved by this marketplace right now. So who is your starting end user for this platform? Is it going to be on the corporate side? You mentioned some corporations maybe don't understand their true risks and how to hedge them. Is it for maybe the individual person who doesn't really understand these markets? Who is the target end user for this platform?
Right. So, I think in the initial form, we're going to be allowing this as a technology that some existing firms will use. And the area we've been looking at currently is industrial commodities and metals and things. But there are a lot of areas, right? So think about like real estate. So imagine if you're a community bank, for instance, and you're lending primarily against real estate. There really isn't a good derivatives market for real estate. And real estate is the world's largest asset class. So it's kind of strange to think that we have this massive asset class and a huge market, but no one's actually serving it. And there are a number of reasons for that. Again, part of that having to do with the sort of nonlinear risk. If you're a bank and you lend against real estate and real estate prices go up, you don't get any of that, right? And in fact, if real estate prices go down, you don't really care until it hits a certain threshold, right? So we're kind of, we are looking at some industrial commodities and some partnerships in that area. But I think from our standpoint, it's anything that isn't currently served. The real estate, industrials, agriculture in a lot of the developing world. I actually was reading some things recently about companies growing corn in like South Africa, and they were using the CBOT corn futures contract to hedge. Well, they can't deliver that to someplace in Iowa. It's not really. There's a lot of basis risk on that trade, right? So it's not exactly a good hedge, but it's all they had. It's the only thing that was available. So we're trying to build something where it's very easy for someone to start a new market. We can test it. It's cheap. It's easy, and we can create something that will solve a lot of those risks that are out there.
So let's say someone comes to you with what you just mentioned, the real estate risk. They have a portfolio of real estate. I can certainly understand in this market right now seeing some risks to certain parts of real estate around the country. So they come to you at Gray Swan and they say, we have this real estate risk. We would like to hedge it in some capacity. You guys then will you construct a bespoke hedge for them? And you're going to go and source that in the OTC market? How does that process unfold from there? Once they contact you with that need, how does that work?
Right. So essentially what happens is if you can, and again, I'm on here trying to describe a visual and intuitive technology, but only using voice, so it's somewhat less effective. But imagine that that person can come in and select from a number of indices, right? In this case, let's say it's a regional real estate index because it's a bank or something like that. What they then do is they grab a curve from a number of different templates that they can pick. And then they can just manipulate that. They just grab the little curve with a cursor and drag it up so that, say, the real estate market dropping 20%, they're going to make, say in this case, $10 million against that loss. Say no gain for the first 10% down, and then between 10 and 20 they make a certain amount, and then they can drag the curve further and say, okay, between 20% and 30% decline, we actually have a steeper loss. So we'll draw a line there. Then on the flip side, they may say, okay, if the price goes up, I can take some money out of loan loss reserves or something. I can take a small loss if it goes up, and they draw that curve. They come up with this weird thing. They save it. They hit a button. It gets shared out to the world. People get to see that someone's looking to do this. Then from the trader or market maker side, people will be able to see that there's someone looking for this curve and pick any portion along there that they want to take the other side of. And so essentially, what we're doing is essentially facilitating that process where people, can say this is the curve that we're looking for, and other people can come in and again trade any portion along that curve that they're interested in. So they could say, well, I only want to take the upside portion because I want to bet things are going up, or I'll take some of this downside and I know it's very likely I'll win and I'll get a decent return, but I'm not going to make 20 to 1 on my money because I'm, making a bet that has a 95% chance of winning. So then what we do is we sort of aggregate all of those responses to the individual parts. And so that end user, they just see a single price. Like, okay, to do this hedge is going to cost you, I don't know, throwing a number out there, cost you $500,000. Is that worth it to you for the portfolio that you have and what you're trying to protect? If you want to do it, it's one click. They don't have to think about it again. For the market makers, it can get a little more complicated, but that can be a good thing, obviously, as a market maker. But for the end user, it's going to be very, very simple.
So effectively, you're constructing what amounts to an RFQ platform for non-listed risks out there, Peter.
That's a very good way of putting it, and a way that I would not describe it in many instances because people wouldn't know what that means.
Not the sexiest of ways to put it, but it gets to the heart of it.
But it is exactly right. I mean, that you're essentially creating something where for the end user, it's what is this curve? What am I looking at? What's it going to cost me? Then I don't have to think anymore about that. And then anyone can come in and take any portion thereof until we reach the person's desired trade, or at least, maybe they get to 90% of the trade they wanted to do, but that's close enough for them. So, but that is a pretty accurate description of what that looks like.
But you're a former liquidity provider, so you know the challenges inherent in building up any sort of pool liquidity, let alone for the types of things you're talking about, these kind of bespoke, one-off type risks out there. So how is that process going? Obviously, you have to build a bit of a network here first to be able to facilitate some of this risk hedging and risk mitigation. So how is that network and the building of the pool of liquidity side going?
Well, so there's a couple of points there. Just in terms of how it's going, we've been in touch with a number of market makers, and as a market maker, I mean, having done it, and you're familiar with this, you want places where you can get some edge, where you potentially have, again, the opportunity to get some edge on a trade and to trade in markets. So there are definitely, we have talked to quite a few market makers who are, ready to participate on this. One of the things that helps is while this is a custom bespoke derivative for the end user, this is actually it's made up of small standardized pieces which are all fungible. So we don't have to have someone who wants to have the exact opposite position. You can actually take any portion thereof using these small standard objects. It gets a little complicated here, but one of the ways we described it is with the invention of money, there was something called getting rid of the mutual coincidence of need, right? So it's like I have cattle and I need grain, and there's a guy who has grain and needs cattle. You need to have these people. When there was barter, they needed to have these things exactly match their particular needs. But then when money was invented, you'd say, okay, fine, I'll sell my cattle and I'll buy as much grain as I need. I don't care if the guy, what the guy who I buy the grain from does with the money. So we're trying to do that kind of with risk. So you don't have to, like, say this bank that we just described who has this weird curve. You don't have to want the exact opposite of that bank. You can just take some little slice there. Take the slice that matches you. And by breaking this down into these standard pieces, it makes it easier for the liquidity provider because, again, he's not trying to do this big bulk thing. He's just be able to trade in and out of those smaller pieces.
And now it's interesting because you mentioned like you're working with liquidity providers on this platform, and that certainly would be a first logical step for a lot of people because they have experience, maybe not in these particular markets, but in hedging things using derivatives. But it sounds like some of the markets you're going for, whether these obscure commodities or, like you mentioned, real estate, maybe a little bit outside their wheelhouse. So have you also started looking maybe beyond, like maybe for the example you gave with, the regional bank, maybe other regional banks would want to take part of that risk off their hands or offer a hedge. So have you looked at expanding the universe of potential liquidity providers beyond your traditional, your Jumps and Citadels and everyone else?
Yeah, we have. We've we've talked to a couple of banks, and in fact, one area we were talking to was a network. And one of the things they were doing was interesting. We talked to a person, actually, it's a couple of years ago, but what they were doing was helping banks, and what they had in their network, they had banks with a lot of capital and no loan demand in their area. And then you had some banks that had tons of loan demand but limited capital, and they were trying to bring those people together. So we've actually looked at sort of doing some of the same thing within that, banking area, right? Because there are banks that, based on their particular region that they work in, there's more capital and less of this particular demand. So that allows them the opportunity to potentially share in other markets. Potentially to say, okay, instead of just lending in my area, they can actually take part of the risk that comes from other regions, right? And so they can share that across, they can spread that out and diversify somewhat. So that is an area that we thought of as well, although frankly haven't looked at it as much recently.
And the name, obviously, Gray Swan Digital, that implies certain element of the market. Kind of touched in your intro there about how you were early on the ETH side of the fence. So is the plan to really make a big push into the crypto space with this platform as well, Peter?
Well, so again, building the platform, we're going to go where the demand is, but I think there are areas that be very well served in crypto by having this ability to create this sort of custom hedge, or taking some of these custom parts. So yes, we definitely are interested in that area. And actually, a couple of years ago, when we were very early on in building, and we were not really ready to do anything, we did talk to a couple of people who had raised money. Specifically raised Ethereum and ICOs, and said, hey, you guys need to hedge the risk on that because, those prices can go down. And I think this was when Ethereum was like 650 or something. And some of the responses we got were, well, you don't have to worry because, this stuff only goes up. Since then, I think a lot of those people have learned that, those prices can go down too, although they're doing pretty well right now, but there's definitely a risk. So I think I've given the long answer. Short answer to your question is yes, we're definitely looking in that region as well, because frankly, the system is completely agnostic to what kind of risk is being traded.
Well, if they hadn't learned the lesson by now that crypto can go down, then they're not paying attention. But you mentioned you were early on the ETH spectrum. We have a show on our network that's been running for a while called the Crypto Rundown. We've had a lot of guests cycle through that program, a lot of them with similar backgrounds to yours. Maybe they started in the more traditional. And it's funny to call the derivatives markets traditional because a stock guy still thinks derivatives are crazy, but the more traditional world of options and futures, and then they got lured to the dark side of crypto in some way, shape, or form. They had that inflection point, that come to Jesus moment where they said, hey, these things are kind of interesting. Maybe I want to sink my teeth into these a little bit more. As you were pretty early on the ETH spectrum there, what was it that lured you to the dark side of crypto? What was your inflection point there, Peter?
Yeah, I think I got interested, again, having an opportunity and some time to kind of think of what are the areas that are interesting. I got interested in Bitcoin, I think primarily from the kind of libertarian standpoint of the idea that you could have money that the government didn't control and that you could, store and save and move yourself. Certainly we're seeing a lot recently, what they're doing to our money. It hasn't kind of come out in inflation yet, but hard to imagine with the amount of printing that's going on, it won't. But I got involved, I think, because of those interests, and I thought Ethereum was interesting because of how it was initially pitched in terms of the idea of this kind of alternate sort of legal system. Not exactly where it's ended up, but I definitely started going to those meetups to see what people could do with this, and then actually got involved in the initial pre-sale in Ethereum, which was I kind of described that like walking down the sidewalk, tripping on a crack and landing headfirst in a winning lottery ticket. I mean, it was just such a lucky thing to do, but it's been helpful for us in terms of giving us a few more resources as we try to move forward. But yeah, I mean, I think originally it was kind of, interested in what could be done in terms of, separating money from government and building really interesting new things.
Peter, these are interesting times to be talking about a new derivatives-oriented hedging type platform out there because, of course, we are still in the midst of this global pandemic. 2020 has been pretty much unprecedented by just about any measure you could throw at it. Pandemic, civil unrest, double hurricanes in the Gulf. Pick your poison. It's got all sorts of unanticipated and unprecedented risks out there. We've seen a lot of tumult this year from a market perspective, from a volatility perspective. Some folks maybe got a little bit spooked by the derivative space, either through the exploding volatility or maybe things like crude oil going negative earlier this year. It's been an interesting 6 months or so out there in the world of all things derivatives. I'm curious from your perspective, what's it been like for you guys as you're trying to launch and gain some traction and build some network effect around this new, effectively derivatives-oriented platform in light of everything else that's been going on for the past 6 months? Have people been excited by an alternative to this? Are they maybe a little bit scared when you throw the D word out there? Oh my God, I'm getting the heck out of Dodge. What's the response been like in the early going, particularly, over the last 6 months as we're dealing with all these other things going on?
Well, I mean, it's been interesting because one of the things that I hopefully mentioned early on is that all of the solutions that we build are bounded. And so, you look at the current system, right? I mean, again, you think about crude oil going negative back in May. What the current system does is it adds leverage to an unlimited kind of risk situation. And so, that system can be a little bit dangerous for the people who are involved. It can be dangerous for traders, for clearing firms. There are certainly circumstances in which people have hedged themselves and ended up being worse off because the potential risk of the hedge is larger than they expected. So we've had kind of two effects. One, people are more open to the concept of bounded risk. Even if the bounds are fairly wide, there is still kind of an end point, and you know what it is. And we know there's an appetite for sort of bounded leverage. I mean, you look at like the options market, obviously, and then all these leveraged ETFs that are out there that people use. I mean, there's leverage, but there is clearly a limit to what you can lose. So there's a definite interest in something that is a little bit safer. Both from the standpoint of an intuitive understanding of what you're doing because it's visual and because of those bounds. The flip side of that is some of the partners that we've talked to have had some problems because of the current system, and so people that you're having discussions with are getting quiet. Just because everyone's having to deal with what we've been through, right? And so there's definitely been some cleanup. So it's been a good thing and a bad thing. I think I think what we've been through has slowed a lot of things down, not just us, but at the same time, there's an appreciation for what we're doing, right? There's a greater appreciation of the risk people have. I mean, a lot of people are out there thinking, these, like, again, talking about people who say, the price of that only goes up, or it's very stable, or we don't have to worry about it because we know what we're doing. So there's a definite appreciation for the need for risk and the need for bounds. But then we're all trying to kind of deal at the current pace as everyone tries to learn how to do business in the new environment.
Unfortunately, Peter, that music means we come to the end of our time here on the Options Insider Radio. But it's a very fascinating discussion here about just interesting ways and interesting new risks to confront using some old school and indeed some new school methodology out there, which I'm sure our audience will find fascinating. But we like to leave our audience wanting more, Peter. So if you want to leave them with any hints, any teases of what's coming down the pike from you guys over there at Gray Swan, now is the time, sir. The floor is yours.
Well, I think if you want to know what we're up to, you can go to our Medium page. So it's medium.com/Gray Swan Digital. I should point out the Gray is spelled Grey rather than Gray. And so you can see what our thinking is and what we're doing. Also, obviously, on Twitter and as everyone else is in the world. And if anyone wants to reach us and has any questions, we're happy to answer them. You can reach us at newfinance@grayswandigital.com. I'm sorry. It's newfinance@grayswanmail.com. So I'm messing up my own email address there. So we'd be happy to answer any questions or point people to more information.
And is the platform up and running right now? Can someone contact you with a risk they want to hedge, or is it still maybe an early beta? What's the status of the platform?
Still, yeah, we're heading into beta, and so we are not ready to take on a risk that someone wants to hedge at this point. Although we would love to hear about any of them, so we can try to point people in the right direction and help make our case. So yeah, we're not at that stage. I'd expect we're going to be more public beginning of next year.
Well, Peter, I've been doing this for a while. I get pretty jaded after time, but you brought something new across my desk and indeed my microphone. So I thank you for that, if nothing else, Peter.
Well, thanks for the opportunity to discuss it. I really appreciate it.
And listeners, if you want to learn more, check them out over there, Gray Swan Digital. Remember, Grey, not Gray. And on behalf of Peter and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live. And, of course, join us throughout the rest of the week tomorrow. We got Education Wednesday, so boot camp and OPR will be back in your ear holes. Thursday, of course, we have TWIFO, This Week in Futures Options, as well as the old Options Bootcamp Friday Volatility Views. And it all kicks off again next week, leading into another Interview Tuesday with another episode of Options Insider Radio.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.